What is going on, folks? It is Rigor Mortis. We are back with yet another video, and today we are talking about Shiba Inu. Folks, a lot of red, a lot of pain in the market today and over the past couple of weeks. What I'm going to try to do is explain why I think this is happening and where we go from here. If you guys are new around here, make sure you hit that subscribe button, join the family, throw a like on this video as it really helps the algorithm get it out to more people, and comment down below. I want to hear your thoughts and opinions about all things Shiba Inu. Let's go ahead and jump right into it. First and foremost, why is this happening? And I know this is going to be very, very boring, but trust me guys, this is super relevant. I don't care if you're invested in Shiba Inu, Ethereum, Tesla stock, some random penny stock, this applies to you. And I'm going to try my best to explain it with the little knowledge that I have. Three things: inflation, the Federal Reserve, and banks. First and foremost, right now inflation is absolutely sky high across the globe, but particularly here in the United States. The Federal Reserve was doing a lot of money printing over the past couple of years, and guess what? Now we are bearing the consequences of all of that money printing and injecting funds into the financial system. What comes with that is a sky high inflation rate. And guess what? The Federal Reserve, one of their sole duties, if not the most important sole duty for the Federal Reserve, is to ensure that the United States financial system does not collapse. A sky-high inflation rate, guess what? That is bad news for the Federal Reserve. So they don't care what the market looks like. They don't care if you bought Shiba Inu up here. They don't care if you bought Shiba Inu 10 years ago. They care about that inflation rate. They care about getting it down. They have a little bit of tricks up their sleeve in order to get that inflation rate down. One of them is the federal funds rate. I know you're bored already. You probably already clicked off, but guess what? I'm still going to keep talking. The federal funds rate is whenever one bank loans or lends money to another bank, they have to pay a premium, an interest rate on that loan. Guess what? Over the past couple of years, just take a wild guess what that federal funds rate was. 0%. If I was a bank borrowing or lending money to another bank, I would pay a 0% interest rate. So what does that allow the banks to do? Well, that allows the banks to borrow money like crazy, and borrowing they did. And they would take that money and they would be very, very aggressive with their investments. Guess what else that did? That made it so that the 30-year fixed rate mortgage was really, really, really low, because the banks were borrowing, lending money, they were paying 0%, and the people down there, the retail investors, the ones that are interested in housing and mortgages, guess what? They got a little bit of the benefit as well, because the 30-year fixed ended up going down because there was money to go all around. Now none of that's the case. The 30-year is going up, the federal funds rate is going up, and now banks are becoming a little bit more aware, and they're saying, hold on a second, let me not put all this money into these risky assets. Instead, let me put it in the most boring asset I could ever think of, or the quote-unquote most safe asset that I could ever think of, which is bonds, 10-year treasury bonds. It literally does not get any more boring than that, in my opinion. Quote unquote safe. So that's what's been happening over the past several weeks. Actually, it's been happening since the beginning of 2022. But what changed? Why all of a sudden, rigor mortis, did we see this huge downward spiral over the past several days? Well, the Federal Reserve met and they decided that instead of doing a small incremental increase in that federal funds rate, let's just bump it up a little bit. If you go back to some of my videos, or if you have been a long-time viewer over the past several months, we've talked a lot about this. Two things were on the table: a 1/4 point increase in that federal funds rate, or a 1/2 point increase in the federal funds rate. I told you guys, the market's already priced in that 1/4 point increase. That was that huge dip. Let's just go ahead and take a look at Ethereum really briefly here. That was the huge dip that we saw in Ethereum in 2022. Got down to around 2.5K. I think it actually got down a little bit lower than that. And since then, it's been really, really volatile, just bouncing up and down, and boom, we had this big crash, or mini crash here, but like big crash if you take a look at all-time highs. So then what? What actually happened? Well, they did that 1/2 point increase that everybody was saying, please do not do. And they did it because they felt as if the financial systems was going to be able to handle something like that. So the Federal Reserve, in a way, not directly, they kind of rug pulled us a little bit. So now what? Well, there's a lot of uncertainty. The Federal Reserve continues to be aggressive by the way at which they tighten this number, and they continue to tighten at this rate. Guess what? The markets are going to continue to get shocked. And like I said, they don't care where you bought Ethereum. They don't care where you bought Shiba Inu. They care about getting that inflation number down. And they are going to be as aggressive as need be in order to get that number down. Because guess what? They are avoiding a recession, or trying their best to avoid a recession. Because in a recession, nobody's investing in cryptocurrency. And the pain that we're seeing now would be nothing compared to what we could potentially see if a recession actually does happen. Some financial analysts saying that we are en route to actually go into a recession. I'm obviously not at liberty to talk about that because I'm just not aware nor knowledgeable about the situation. So that is what we got going on. But now what? Is there hope, rigor mortis, or are we all doomed and people that bought Shiba Inu way up here are going to just have to panic for the rest of their lives? Well, like I said, just some guy on YouTube. I can't say for sure, but this is what I'm doing. First and foremost, I am just waiting on the sidelines. I'm not changing anything. I'm not buying. I'm not selling. Yes, I do a little bit of degen plays on the side. Nobody talk about that, but I'm talking about like Shiba Inu, Ethereum, some of the big dogs. I'm just waiting. I'm not being aggressive at all. I'm happy with my current positions. Got a lot of Ethereum personally. I'm just going to hold off. I do have some money reserved on the sidelines for situations like this. Wouldn't be a bad time to DCA in my opinion, but for my current positions, I'm just holding off. I still believe there could potentially be a little bit more pain, but this is how I'm going to go about this so I don't miss that blow off the top potential for ETH when it goes to 10K in my opinion, and Shiba Inu once it eats the zero. So here's how I'm playing it. As soon as I start seeing recovery in the market, if I see Ethereum go past a 3.5K, make its way to 4K, return to these all-time highs that we saw back in November, I think, in my opinion, we could start seeing other plays start becoming a lot more profitable. It's not necessarily about timing the bottom. I think it's about timing the recovery. And once we start seeing Ethereum really make that comeback, Shiba Inu really make that comeback, then I'll start putting a little bit of money into these plays, but I'll be more aggressive about the really, really low cap tokens that have a lot more upside potential. You look at Shiba Inu, for example, $8.2 billion market cap. Ethereum, let's just say $280, $300 billion market cap. In order for ETH to 2x, that means pretty much return to all-time highs, we would have to see a extra $300 billion, let's say $280 billion injected into this market cap. Shiba Inu, in order to 2x, guess what? It just needs 8 billion. Of course, Shiba Inu is a little bit different, but it goes to show you that the upside potential for some of these tokens can be very easily calculated based off of the market cap. Now, obviously, the lower the market cap you get, this isn't a 100% safe rule. This is just kind of a general, very general, loose rule of thumb. The lower the market cap, the more risky the asset, right? I mean, what's riskier, Shiba Inu or Ethereum? I don't think there's any arguments there. Maybe there is a little bit, but let's just take it at face value. So if I put my money into ETH, into Shiba Inu, as I start seeing the recovery rather than trying to time the bottom, for me personally, that could be a safer play. But at the end of the day, that is a trader's point of view. For me, I'm more of a holder, right? So I start seeing these bottoms and I start seeing Shiba Inu, ETH starting to recover. I put some money in, and what I do personally is I just forget about it. I'm not the type to check my portfolio every single day. Obviously, whenever I see Ethereum hurting like this, yes, it hurts a little bit. It stings me a little bit. I'm like, oh my goodness, man, things are not so hot right now. But how much do I actually care from a practical point of view? Not very much, guys. I'll be honest with you guys. I don't mind all that much because for me personally, it's not a game of weeks. It's not a game of months. It's a game of years, and it's a game of decades. That is the perspective that I take when it comes to cryptocurrency. That is all I have for you guys in today's video. Please keep in mind, folks, I'm by no means a financial advisor. I'm just here to put you guys on plays that I'm in. Please go out and do your own research, as these videos are for entertainment and educational purposes only. Just some guy on the internet. Do not listen to me. Thank you guys so much once again. It's been your boy Rigor Mortis. I'm out the scene, folks. Out.